Welcome to our comprehensive guide on understanding the share market. In this video, we'll simplify complex concepts and provide you with practical examples, ensuring that you have a clear understanding of how the share market operates. Whether you're new to investing or looking to enhance your knowledge, this video is for you. So, let's dive right in. What is the share market? The share market, commonly known as the stock market or equity market, is a platform where investors can buy and sell shares of publicly traded companies. It acts as a marketplace for individuals and institutions to trade securities, such as stocks and bonds. The concept of the share market revolves around the idea of buying ownership in a company. When you purchase shares of a company, you effectively become a shareholder and are entitled to a portion of its profits and assets. The share market provides a means for companies to raise capital by issuing shares to the public, allowing investors to become part owners of the company. How does the share market work? The share market operates on the principle of supply and demand. The price of a stock is determined by the interaction between buyers and sellers in the market. If a particular stock is in high demand, its price tends to rise, while if there is more supply than demand, the price may decline. Investors buy and sell shares through stock exchanges, which act as intermediaries facilitating these transactions. Common examples of stock exchanges include the National Stock Exchange, NSE, and the Bombay Stock Exchange, BSE. How can you invest in the share market? There are several ways for individuals to invest in the share market. The most common methods include buying individual stocks, investing in mutual funds, or purchasing exchange-traded funds, ETFs. Buying individual stocks, you can directly invest in specific companies by purchasing their shares. This approach requires research and analysis to select stocks that align with your investment goals and risk tolerance. Mutual funds. Mutual funds pool money from multiple investors to invest in various stocks and other securities. By investing in a mutual fund, you gain exposure to a diversified portfolio managed by professional fund managers. Exchange-traded funds, ETFs. ETFs are similar to mutual funds but can be bought and sold on stock exchanges like individual stocks. These funds typically aim to replicate the performance of a particular index or sector. Example of share market investment. Let's consider a simple example to better understand how an investment in the share market works. Suppose you have $1,000 and decide to invest in company A, which has a share price of $10. With your investment, you can purchase 100 shares of company A at $10 each. Over time, if the value of company A's shares increases to $15, your investment would be worth $1,500. You can then sell the shares, making a profit of $500, excluding any fees or commissions. And there you have it. We hope this comprehensive guide has provided you with a better understanding of the share market. Remember, investing in the share market involves risks, and it is essential to conduct thorough research and seek expert advice before making any investment decisions. Stay tuned for more informative videos from our channel. Until next time, happy investing. If you want to learn more, click the link below.